Welcome back, everybody, to the Schaefer Stock Market Podcast. My name is Josh Selway. I am an editor at Schaefer's Investment Research. Thank you for tuning back in to the Schaefer Stock Market Podcast, the podcast that we do just about every week, giving you quick rundowns of what we're looking at here at Schaefer's Investment Research. I say just about every week, of course, because I missed the past week and a half or so. It's been a busy time around here with the holidays and everything that's going on. There's a lot happening right now, especially because we're going into the new year, and that means looking at some of our top picks in 2020. We'll have those coming out pretty soon in a number of different places, so be on the lookout for that. And I definitely wanted to mention that because even though as options traders here at Schaefer's Investment Research, meaning we usually are only looking at shorter time frames, maybe 3 months to 6 months or so on average. But I will say, since I've been at Schaefer's for over 5 years now, some of our year-long picks from our traders have been pretty accurate and impressive. While we are typically known for being options traders and maybe more short-term traders, our year-long picks have certainly been strong as well. So I'd recommend being on the lookout for those in the coming weeks. But again, it's great to be back. I want to talk a little bit about the broader markets because, ladies and gentlemen, we apparently have a phase one trade deal between the U.S. and China, according to Bloomberg. I am recording this on Thursday, December 12th, and this just came out within, an hour or so. So this is breaking news coming to you right now. Of course, by the time you listen to this, it won't be breaking, but that's beside the point. What is important here is that we've been waiting a long time for some kind of progress, real progress besides these vague updates and headlines that everybody's been trading off of. And what's interesting about this is this comes right at the point where for this podcast, I was going to talk about how traders were clearly fatigued with all of these trade updates that really didn't amount to anything significant or consequential, really. So what we saw in recent days was that there'd be a headline about trade and not a lot of reaction to it. In fact, one of our midday newsletters this week said something about how stocks do nothing despite the trade buzz. So it was clear to us that really traders were not reacting as we have seen in recent months, even going back a year when there'd be these type of changes in trade sentiment, if you will, or the general feel for where the trade talks were. It'd go up and down. One day it'd be good, the next day it'd be bad. So here we are. Apparently a phase one trade deal is in place. Trump could announce it as soon as today, so we'll just have to wait and see if that comes to fruition. But we have the Dow Jones Industrial Average spiking to all-time highs as a result. So that is what we're looking at today from a broad market standpoint. S&P at all-time highs as well. So from a broad market standpoint, at all-time highs, once again, we'll have to see if this trade deal does in fact come together and what that means going forward. I don't know how many phases there could be to this trade deal, but apparently a phase one, whatever that means, is set to be signed. Okay, as far as individual stocks, I just wanted to highlight a few drug makers in particular that made big moves this week. We had a lot of new data from drug makers for a number of different fields here. So I want to go through and just give you a few different names that you can look into yourself and some of the moves that they were making this week. And in particular, in our midday newsletter earlier this week, we called out two names that were making big moves. One was Magenta Therapeutics, ticker MGTA. That stock was surging higher thanks to a gene therapy breakthrough. We actually linked to the direct press release for that news. If you want to go check that out, you can find that link in that newsletter from Tuesday in our midday market check for Magenta Therapeutics and the gene therapy breakthrough that sent that stock higher. Magenta has given back some of those gains to pull back closer to a recent area of consolidation, last seen hovering around $14 per share. Back in March, that stock peaked up around $20 per share and had been grinding lower since, but obviously a strong uptick in recent weeks. So we'll see where Magenta Therapeutics goes from there. Bluebird Bio, that stock was surging the same day as Magenta thanks to good data for its CAR-T therapy for patients with multiple myeloma. And what's more, Jefferies came in and said that while the initial data actually was kind of mixed that Bluebird presented there for its CAR T cell therapy in these patients, it suggested that higher doses of the treatment could result in better data down the road. So that helped Blue move away from 52-week low territory on the day. It pushed higher. Bluebird Bio, ticker Blue, was last seen cooling a bit, down 2.5% today, trading at $84.81. That stock, if you recall, really burst onto the scene in 2017, or that's when it had really was in focus a lot because it had such a huge year back then, more than doubling, maybe tripling in value at one point, traded as high as, eclipsed $230 per share back in early 2018. But since then, moving lower, traded down around $70 per share just a few weeks back. So we'll see here if Bluebird Bio, some more data can help it get moving higher yet again. One stock that definitely does keep going higher is 47. That's it. It's just 47 Incorporated. Ticker FTSV. That is a clinical stage immuno-oncology stock that coming into November was trading down at $6.90 per share, and now it is all the way up to $38.75 for a gain of 463% or so in just a matter of weeks. The company gave a presentation at this past weekend's annual meeting for the American Society of Hematology. And you can check out that presentation on the company's website. We also linked to it in the article we wrote about 47 over on the website at schaefersresearch.com, titled Bull Notes Keep Coming After FTSV Stocks Absurd Rally. So find the presentation there along with some more data on the stock. We did note that number of analysts came through and raised their expectations, as you might expect, on 47 stock. So that will definitely be a stock to monitor going forward. Again, it is up 7.7% today to trade at almost $39 per share. As I said earlier, went above $42 per share, trading at all-time highs. So a huge week for this stock thanks to well-received data and a well-received presentation. And the last healthcare stock I'm going to mention here is Athenix, ticker ATNX. SunTrust Robinson just came in with a buy rating and a $28 price target for that stock, which was last seen trading around $17 per share. So some significant upside being priced in there from SunTrust Robinson. The brokerage firm believes that the company's lead drug candidate will receive regulatory approval and could become a better chemotherapy option for patients. Athenix stock enjoyed a huge bull gap last month and is now testing the site of a huge bear gap from August. So it's been a volatile stock in recent months. Actually, since July, it's touched both the 52-week high and a 52-week low. So it's been all over the place, kind of in the middle of that range right now at $17 per share. Okay, I have to talk about Peloton, ticker PTON, because the price action has been so interesting to follow given this outrage around its new ad, which no matter how you slice it, one way or another, whether you think it's a big deal or not, just the ad itself was pretty weird, the acting and everything, just kind of a weird vibe to it. I don't really know. It's just kind of meant to go viral, it seems like, and it certainly did. Obviously, you had Ryan Reynolds' gin company making a new ad in response using the same actress. Really wild ride here. But going back to the stock for Peloton, which is interesting, this will obviously be its first holiday season as a publicly traded company. Has to be a huge time for the company. That they're really drilling down, trying to get some good sales for the holiday period to impress investors. Actually, right before during November, I should say, Peloton stock was red hot, rising from $22 per share all the way up to $37 or so to trade at all-time highs. But since then, moving back lower down to the $30 area. And we've had some very bearish notes come out. Of course, Citron Research comes in and says that the glory days of hardware sales are in the rear view, suggesting that Peloton stock could go all the way down to $5 per share. And then you had Hedgeye, an investment firm, come out and say that Peloton stock could be cut in half. So some very big bearish calls coming through on Peloton stock, which again, trading near $30 per share. Going back to its first day of trading, it opened at $27 per share. So just a few bucks above where it originally opened for trading, and you have many people moving in here to say it's going lower. As far as options traders are concerned, right now you have peak open interest by a wide margin in the January series here at the 50 strike call. So that's far out of the money, which could suggest that's a short seller. I mean, there are obviously plenty of people shorting the stock here. That could be a short seller using that out of the money call to hedge against a huge upside push here in the shares. You also have heavy open interest in the January 35 call and the January 30 calls there. So unless those are short sellers hedging, anyone else that would be buying those calls would be standing the profit should the stock move higher in the weeks ahead. As far as the December front month, December series, again, peak open interest at the 30 call. So there may be some bulls hanging around Peloton right now, but in a tough few weeks, to say the least, for the stock. We'll see, though, how the holiday season goes for Peloton. Real quick, I want to give a shout out to Broadcom stock, ticker AVGO, because we are looking at some of the best stocks from the past decade, and that was at the top of the list. One of the best stocks, up almost 1,900% in the past 10 years. So we're looking at some of the best stocks in the past decade. Netflix was at the top of our list for S&P 500 index stocks. One of the best, well, Netflix was the best performer in the S&P over the past 10 years. Broadcom was up there as well, and fellow chip maker NVIDIA was also one of the best stocks in the past decade. So tech dominating that list of the best S&P 500 index stocks in the past 10 years. And what's interesting about Broadcom is that near-term open interest is actually unusually put heavy at the moment. So despite this stock being very strong in recent years and holding near record highs, options traders have taken a defensive position at the moment. So this could be a way that sentiment could shift back to more normal conditions here in the options pits, which would help Broadcom move even higher once again. All right, I'm going to leave it right there, folks, for this episode of the Schaefer Stock Market Podcast. Thank you again for tuning in. Wherever you are listening, please subscribe and review the show. Head on over to schaefersresearch.com to see everything we're looking at from day to day, and check out our free newsletters, including the Monday Morning Outlook delivered to your inbox every Monday morning to give you a preview of what we're looking at for the trading week. Check out Schaefer's on Twitter, StockTwits, Facebook, and Instagram, or check out my Twitter at Selway151. Until next time, again, this was Josh Selway. Thank you again for tuning in. I will talk to you all